Good morning and welcome to the Daily Wrap from Pepperstone on Thursday the 13th of July 2017. I'm Darren Sinden. Let's take a look at overnight changes and price moves we need to be aware of. Yesterday was really all about interest rates. Canada raised, the Bank of Canada raising their rates there by 25 basis points, whilst in the US, just over the border, Janet Yellen gave a dovish testimony to Congress and the US dollar weakened. Dollar index closing at 95.75.70 in New York. Janet Yellen is, of course, back on the stand today in Congress, so it'll be interesting to see what effect, if any, her comments have on the dollar today. I thought we'd look at a chart here briefly that I think encapsulates what's going on between the UK and Europe as far as Brexit's concerned. The blue line is euro dollar, the green line is cable. We can see the rising trend in euro dollar, a much smoother path and a far choppier ride for cable. And this area here, the gap, I think we can call that either the premium or discount for Brexit, depending on your standpoint and where you are, probably on either side of the border there. Okay, let's take a look at what's on the calendar, events that may move the market today. We've had quite a bit of data out before we recorded this report. First of all, consumer inflation expectations in Australia are up to 4.4%. And I think that's an interesting stat given that the previous read was 3.6%. We've also had some very interesting data out of China very early this morning. Foreign direct investments, exports, imports, the trade balance as a whole. All of that has been pretty well received. We'll look at that in a bit more detail in a moment. To come, we have consumer price index data from Germany and France around now. Germany, and a little later from the French data. And then moving to this afternoon, weekly initial job list claims around 13:30 London time, 12:30 GMT. And as we noted before, Janet Yellen speaking again in Congress. That starts at 1400 GMT or 1500 UK time. There's also a fellow FMC member, Brainard, speaking later in the day. Okay, let's have a look at breaking news. Any comment that's caught my eye? Focus has been in Asia really this morning. As we just noted, we had Chinese trade balance data. Imports grew, but the trade surplus for China rose to the second highest level in 2017, boosted by a sharp rise in exports. So the Chinese economy appears to be firing on all cylinders again. Asian equities continue to rally on the back of that, and the Hang Seng has traded above 26,300 this morning. The Bank of Korea upgraded its GDP outlook for the country and left rates unchanged, so more positive news in Asia. Coming back to Europe, President Trump begins a visit to his French counterpart Emmanuel Macron ahead of the Bastille Day celebrations there. And staying with presidents, but this time the former Brazilian president Lula da Silva, he was sentenced to 10 years in prison after an anti-corruption probe found him guilty. The question then that we must look at from the news headlines is the Hang Seng Index, the Hong Kong Equity Index, going back to 28,000, the green line there, dashed green line. I think the momentum is with the index, and if it can close today well above 26,000, then I think there's a very strong likelihood it may retest those May 2015 highs. So food for thought, something for you to take away into the trading day. Let's have a look at that slide now. And the question or the comment is this: Janet Yellen's comments to Congress yesterday were seen as dovish by the market. But just what is the path for US interest rates now? The chart shows Fed Fund futures for December 17, and it shows an even split between those expecting no change and those expecting a rise in US interest rates. And that, to me, suggests uncertainty even among institutional investors. Right, thank you for your time. Please take a moment to read this risk disclaimer and warning. Trading leverage products, Forex, CFDs and other derivatives can be a risky business. If you're in any doubt about the risks involved, please contact your Pepperstone account representative.